Beginning cash for problem PR15A is $45,000. So we plug that number in part 1. Then we're going to add accounts receivable, which is $93,000. These 4 accounts here are your assets. Put too much. Let's go back and correct. Take out a 0, $93,000. Then we have supplies of $7,000 and land of $75,000. All 4 of these again are your assets. We add all 4 together because assets, as it shows up here, assets equal liabilities plus stockholders' equity. So we're working with the assets. The total of $45,000 plus $93,000 plus $7,000 plus $75,000 equals $220,000. Correct? You do the math as well. Since assets equal liability plus owner's equity, we also have to do, or stockholders' equity, the other side. So accounts payable is the liability. We have a balance of $40,000 there. Common stock, we have a balance of $60,000 there. But we do not know what retained earnings is. So retained earnings becomes our X. So what we know is common stock and accounts payable. We add those 2 together. $40,000 plus $60,000, what is it? $100,000. So now on the left side, we have 220. On the right side, we have 100,000 plus retained earnings, which is X. So if we're solving for X, that means we're going to move to the other side, which means we're going to subtract 220, which is our total assets, minus 100,000, gives us 120,000 as our retained earnings. Now, if you scroll down in your problem, you'll notice that they already calculated retained earnings. So it tells you that your answer that you calculated in part A is correct, 120,000. Here are all your beginning balances on the first line. A is the first transaction where the owner, Joe, invested cash plus cash, $35,000, for common stock, $35,000. Always 2 accounts are affected. Then we did the math. 45 plus 35 gives us 80. Accounts receivable had nothing. Supplies had no transaction. Land had no transaction. Accounts payable, and nor did retained earnings. So those balances remain the same. But common stock, 60 plus 35 gives us 95. So that's how we start our new balances. We go to B. B says paid $50,000 for the purchase of land. So if we paid for money for land, then we have to minus 50,000 here. That's going to leave us, if we do the math, 80,000, 50,000 from 80,000 gives us 30,000. That did not affect accounts receivable, which is the next account. It did not affect supplies, but it did affect the land because that's what we purchased. So we're going to increase land by the 50,000 that we just acquired. So we're going to put a plus here for land. So 75,000 plus 50,000 gives us 125,000 in land, if my math is correct. This means that these lines, you had nothing here, so you just bring down to 93,000. You had nothing here, you bring down to 7,000. You had nothing here, so you bring down to 40,000. You had nothing here, so you bring down to 95,000. And if you do the math across the accounting equation, you will notice that assets still equal liabilities plus owner's equity, which is, or stockholders' equity, which is the same thing as we started out with. The right side equals the left side. If we go to C, C tells us that we received some cash, so that's going to increase cash by the amount of $32,125. You're going to do the balances all the way down. What I'm going to do now is just do the transactions. Why do we receive it? For revenue. So that means we have to come all the way over to our revenue account, and we're going to have to increase revenue on line C by the $32,000 we received in cash for dry cleaning revenue. So now we have some revenue. What we did on the left, we did on the right. So therefore the balance in revenue, because there were no other transactions, is 32,125. And from here out, I'm just going to do the balances for the accounts that we're working with, that are changing. All the other accounts, you have to bring them down. Okay. The next transaction is D. Paid rent for the month. We had $6,000 in rent. So if we paid rent, that means that we used cash. So we're going to pay out. Go back and make that a dash. We paid out rent of $6,000. So this is going to reduce our cash by $6,000. So we started out with here $62,125, and we're subtracting $6,000. You should be doing the math with me. And we should have $56,125 as a balance in cash. Notice nothing happened to accounts receivable, supplies, or anything in between until we get all the way over to rent. When we get to rent on line D, we're going to increase our expenses by the $6,000. And this is our only transaction here, so this is our balance, $6,000. So, did I do something wrong? Paid rent. Am I on the right line? Yes. Okay, going back across. We're going to go back down to E. So on E, we purchase supplies on account. So that means we go to supplies, we increased our supplies. So we're going to add supplies, 6,000. And, nope, is that the right amount of supplies? 2,500. 2,500 of supplies we're going to add. We pay for them on account. On account, when we, the owner, pays for something, is accounts payable. We increase the amount of debt that we owe. So here we have been having a balance of 40,000 up until now. So if we were to do the balance all the way down, we have 40,000 here. We had no transaction. We have 40,000 here until we got here. Now we have 42,500, if the math is correct, in liabilities. If we were doing our balance up here for supplies, we had 7,000. And for the 7,000, we enter it. We go down to the next balance line, 7,000. And then if we were to add that 2,500 to it, now we have 9,500 in supplies. So our transaction, 2,500 in supplies, increased our debt and increased the number of supplies. So we go to F. So in F, when we look at F, we paid creditors on account. So in other words, we paid the people that we owe in F. If we paid them, we reduced the amount of cash that we have. Sorry, go back and put a dash by the amount of the payment. So we paid $22,800 to our creditors. What do we pay them? Who are our creditors? I just told you. They're your accounts payable, the people that you owe. So therefore here, we're going to reduce the amount that we owe. So we no longer owe $42,500. We owe $42,500 minus $22,800, which is going to give us a balance of $19,700. Okay, so let's recap because I don't want your sheet to look crazy. We had no transaction for cash in E. For here, that brings our balance down to $56,125. If we were to subtract the amount of our accounts payable bill from the cash that we have of $56,125, our new balance in cash would be $33,325. If we were to bring our balance down under accounts receivable at this point, we would have $93,000. Remember you to bring your balance down. And I'm just going to copy and paste it on each line for the balance. Okay. You need to get in the practice of doing this so that you know what it is that you're doing. Here, $9,500 is our balance for supplies because we did not have a transaction there. We did not have a transaction here for land since we bought the land. So every balance line, this is our balance. Every line. Okay. We have our $19,700 that we still owe our debt collector. $95,000 here is our balance. Remember, we had no transactions, so we're just going to copy it down on every balance line. You just bring the totals down. If you do this as you go, you won't be doing what I'm doing right now. We did not have any other transactions for retained earnings, so we're just going to bring that balance down. Okay. And then the same thing for, we had no transactions here for dividends yet. Dry cleaning revenue, we only had the one transaction, so we're going to bring it down as well. Okay. The only other account that we had a transaction for was rent expense, and we had an expense of $6,000. This one is showing an asterisk, meaning it's marking it incorrect because I did not put a minus. The reason why you write a minus on the total line is because you're going to eventually subtract all your total expenses from your total revenue. Therefore, your balance has to be shown as a subtraction so that you get the right net income or loss. Okay, so let's look at G next. So all your balance, this is how your spreadsheet should be filled out. So in G, we charge customers for dry cleaning revenue on account. So our customer's account is accounts receivable. So we go here to accounts receivable, we're increasing it because we performed a service. What service did we perform? Dry cleaning service. So we're going to increase what they owe us by $84,750. They already owe us $93,000. So therefore, our customers now owe us $177,750. And don't forget to indicate that your account increased. Okay. Nothing happened to cash, so we're just going to bring it down. Same thing here. Nothing happened here. Remember, we earn revenue, so the only two accounts are affected, accounts receivable, and let's go on and go over the revenue so you can see where the other account is affected. So we also increased our revenue by $84,750. So we already had revenue of $32,125. So now we have a total revenue of $116. If you do the math with me, then your math is correct and you know what to do when you do your own problem. $116,875. Again, the $6,000 we just need to copy and bring down because we did not have a transaction. Most of these problems you will only have one transaction in your expense account. Okay. Bringing down balances. Now, we're going to go to H. H, we receive the monthly invoice. That means a bill that we have to pay. Why do we receive it? For the dry cleaning expense. If you read the scenario at the top, it told us that we outsource the actual cleaning of the clothes. So that means we have a bill that we have to pay. So if it's a bill that we have to pay, must be accounts payable. So we're going to go to accounts payable and increase the amount of debt we owe by the amount of the bill, which is $29,500. So we already owed $19,700. Now we're adding $29,500. So this gives us a total of $49,200. So that you know your total debt. Again, bring your balances down because none of these accounts were affected. Okay. So we have accounts payable, and it was for an expense, remember? Dry cleaning expense. So I'm going to scroll up so you can see where dry cleaning expense is. Dry cleaning expense is right here. So we're going to go down to that account line, which is 50 for line H. And we're going to increase our expenses by the amount of $29,500, the amount of the invoice. Therefore, our balance, and remember, it's an expense, so we're going to write it as a negative amount because we're going to subtract them from total revenue. The end is $29,500. Therefore, your balance here, these three also did not change, so we're just going to bring the balance down. As did this one, did not change. Okay, and that was for your rent expense. Your next transaction, which we're almost done, if I can navigate this worksheet. Next transaction is I. So in I, we paid. What did we pay? We paid out 4 bills. So let's go over to the bills first. So we paid out truck expense, wage expense, truck expense. So let's scroll up so we can see who. Okay, so we're in the column of wage expense. So we spent out $7,500 for wage expense. We did rent already. I believe this should be a supply. So we need to go over one more to truck. So here for truck, we have $2,500. Then we're going to go over to, what's the next one? Should be utilities and then miscellaneous. I can get used to this screen. Utilities was $1,300, and then miscellaneous is $2,700. So if you add up these 4 expenses, $7,500, $2,500, $1,300, and $2,700, what do you get? The total amount of cash that you spent out is what you get. So if you did the math correctly, you should have a total of, you guys did $14,000 being paid out of what account? Cash. Why? Because we're paying bills and the transaction said paid. So now we're going to go all the way over here to cash, and we're going to reduce cash by the total amount of those expenses, which is the $14,000. Okay. Subtracting $14,000 for $325 leaves us $19,325 in cash. All these other accounts in between did not change. So we can bring those down. Okay. J, received cash from the customer. So that means we got paid. The customer paid their bill. So we're increasing our cash by $88,000. So remember, our customer account is accounts receivable, which is the second column here, and their bill is being reduced by $88,000 even. So where they owed us $177,750 before, now they paid on their bill $88,000, so they only owe us half, or just about half, $89,750. Okay. We have increased our cash $88,000, so now we have $107,325 in cash. Nothing else was affected. So as you can see, the accounting equation remains intact all the way on both sides, because the cash account and the accounts receivable account are both on the asset side. So assets are we just shifted from one asset to another. So the total balance in accounts is still in balance. Okay, we determined that the cost of supplies on hand means the amount of supplies that we still have left. Okay, supplies is your third asset. If you remember here, we bought some. We had a beginning balance of 7,000. We bought 2,500 more. On the shelf, we thought we had 9,500, but as the sentence reads, we only have 5,900 as a balance. So if we have a balance of 5,900 on hand, and we thought we had 9,500, that must mean we used 3,600, which is what the problem is showing us. Yeah, it doesn't like the negative, but we're going to subtract it. I want you to see. The offset to this is your supplies expense. So we have to go all the way across to the supplies account, which is here. Supplies expense, just so you know. Okay. Let's go back. And we're going to record our expense of 3,600 supplies and our ending balance. This side can be negative. It does like it over here because we subtract from our expenses. Everything else in the middle did not change. So all these accounts in between here, the balances were not affected. You have to know that only 2 or more accounts are going to be affected per transaction. No more. 2 is every transaction. It can be more. It's usually no more than 4, maybe 5 for the problems you'll do in this book. Real life, of course, that's different. It just depends on what's happening in real life. But it's always going to be 2 accounts. If it's more than 2 accounts, it's called a compound transaction, which is one of your definitions you need to know. You do need to know all of your vocabulary. So if you have not been studying your vocabulary, don't just focus on doing the problems. You have to know the language. Okay, so I'm filling in the balances. Study your vocabulary. Last but not least, I believe this is your dividends account here. Let's scroll up so we could see it. The other way. Okay, yes, that's our dividends. So here in our dividends account, in the last transaction, we paid dividends. So we paid $12,000 in dividends. So our balance here is $12,000. Okay. We're going to put the minus here so you can see that we paid that out. And if we paid anything, we use cash. Okay. So we're reducing cash by 12,000. So if you remember, we had no cash transaction for K, so we just bring down the balance. And our ending balance in cash after this payment is $95,325. All the other balances remain the same. So all you're doing is bringing them down. Okay. I'm just bringing down your balances just so you can see what to do next. Now, all these amounts down here at the bottom represent the ending balance in each of the accounts at the top. So your ending balance in cash is $95,325. Your ending balance in accounts receivable, $89,750. Supplies, $5,900. Land, $125. Accounts payable, $49,200. Common stock, $95,000. Retained earnings, $120. Dividends, $12,116 in revenue. $29,000 is your balance in dry cleaning expense, $7,500 in wage expense, $6,000 in rent expense. Oh, we forgot to bring the $6,000 down. And it's a negative $6,000 all the way across. So remember, that's not what I want to do. Escape, Control C. We want to copy the balance and make sure we bring it down. Okay, so we had $6,000 in rent expense. We had $3,600 in supplies expense. Utilities, we had $1,300. And then in miscellaneous, we had $2,700. So all those amounts on the bottom of the chart, you're going to come over here and plug into the financial statements. You need to learn these, so I'm not going to go through these with you. If you look in your textbook at the example on page 18 and 19, you will see how these should go. It's very important to know how the dates should be formatted. The only thing I will briefly discuss is your statement of cash flows. You have three parts. Operating activities, you need to know the definition. Investing activity, financing activity. Operating is everything day to day. Money coming in, that's plus money going out, and then a subtotal. Investing cash is money that you spend to improve your business by buying fixed assets. Sometimes you can sell the fixed assets. If you notice here, we only have one line, and we only had one fixed asset, which was land in this problem. Financing is dealing with how your company is financed. Yours is financed by selling stock. And so you have common stock, and you pay your common stockholders dividends. So that's your money coming in, money going out, and then again, you do another subtotal. You add all three of these amounts together, operating, investing, and financing. You get whether you have an increase or decrease in cash, and it gives you a hint here that you have an increase. You find the beginning balance, which was given to you in part one, and then you calculate the ending balance, which should be your $95,325 that you already calculated. When you're trying to determine which ones are cash, which ones are operating, investing, or financing, you go way back over here to only your cash column. Here's your beginning balance in cash. Here's $35,000 that came in for common stock, so that'll be plus. Here's $50,000 that went out for the purchase of land, so that will be minus for the investing. Had $32,125 that was revenue, so that's part of your operating money coming in. You have $6,000 that you paid out in rent. That's part of operating. Then you come all the way down. You had $22,000 that went out for paying a bill, which is also operating. Go all the way down. You have $14,000 that came out for paying for expenses. That's operating. You have $88,000 that came in from your customer paying on their bill, so that's operating. Notice how they're more operating than anything else. $12,000 that went out for dividends, and that's it. And so you analyze all your cash by explanation or definition and plug them in and do the math. Happy learning. Make sure you read.